With more than 6,000 small and microcap companies listed, if you're looking for the next Apple at the earliest stage, then channelchek truly is the orchard. The listed companies support channelchek, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for channelchek so you're always up to date on what's going on at the small and microcap data place. Welcome to the C-Suite series presented by channelchek and Noble Capital Markets. Noble is an SEC-registered, FINRA-licensed broker-dealer and the source of the equity research available on channelchek. Today's interview features Energy Fuels, NYSE ticker symbol UUUU. Noble Senior Research Analyst Michael Heim interviews Energy Fuels President and CEO Mark Chalmers. Visit channelchek.com or click the link in the description for Noble's research on energy fuels, as well as news and advanced market data. And now, here's Michael and Mark.
Today we have with us Mark Chalmers of Energy Fuels. Energy Fuels is a uranium, vanadium, and rare earths mining and processing company. I'm going to start out talking about uranium. We'll touch on the other aspects a little bit later, but first question for you, Mark. I think the general consensus out there is that uranium prices need to go up at some point. We're a little bit of stalemate right now where producers say they need plus $40 a pound pricing and buyers aren't willing to buy when spot prices are under 30. The supply and demand is all very favorable. We're seeing demand grow, supply being cut back, but this is a story that we've kind of been telling for the last 5 years. What gives you hope that maybe we'll start to see prices rise in the more immediate future?
Well, first of all, Michael, it's my pleasure to participate with you today on these questions. Look, I think that the realization that nuclear power is important portion of this whole focus on reducing carbon emissions is coming to the forefront, and I think that is what people are paying attention to. That nuclear just recently, the EU said that nuclear power is green energy, and I think that's a big step forward, at least in Europe. I think the issue of uranium prices is we've really got to get to a level where the price of production is justified and the replacement value of a pound is justified. And at $30, that just isn't the case. And even at, you say, $40, I'm hard pressed to think that that's even a fair replacement value either. So I think that there's a point where you've got to get into an economic outcome that replaces the pounds that are being consumed currently. I think that the focus on nuclear is really increasing and amping up, and I think people like Bill Gates, advocating nuclear power, TerraPower, small modular reactors, all those things seem to be coming together in a really nice intersection to have a sustainable industry going forward in the space.
So we are seeing the demand rise. We're seeing, some of the Fukushima plants maybe coming back on, U.S. plants being built. You mentioned Europe. We haven't talked yet about the possibility of a national uranium reserve. That was in the last budget. How significant do you think that is, and what are you hearing on the details of how that might work?
Yeah, look, and I think it goes back to realization that the United States is the largest consumer of uranium in the entire world by a country mile, actually, and the need to have an industry because we can't become totally dependent on imports. The uranium reserve, the appropriations of the uranium reserve was a good first step. It's not a massive step yet, but it's a good first step. I think it shows the appreciation from a bipartisan way that we do need to have a uranium industry or the ability to fuel our reactors and our Navy and our military applications. So I don't see it as a massive game changer, the funding of the reserve, but I see it as a step in the right direction. It will have carriage by the Department of Energy. It's a little unclear on exactly how those funds will be administered and managed. We are pushing that next year, 2022, that the 75 million increases to 150 million. Even when you look at 150 million, the reserve is not designed to support 10 companies. It's designed to support 2, 3, 4 projects total, not everybody. So, we need a sustainable, reliable, and robust might be over characterizing it, but we just need some support here while the price of uranium is still too low on traditional market fundamentals.
On the supply side, we're starting to see a couple of the large Canadian mines come back online, but at the same time, we've lost a couple of big mines in Australia and Nigeria. Traditionally, Kazakhstan has kind of stepped up and flooded the market and met that gap between the supply and demand. Do you see them being able to do that for much longer?
Look, it's kind of complicated, but I think the way you characterize it, some of these mines are coming online, some of these mines are coming offline. Like Ranger in Australia and in Niger. And look at some of the projects in Kazakhstan are going to come offline. Some of them are becoming exhausted. You can only run these projects for so long. So I think the Kazakhs are always going to be a huge player in the space, or at least in the foreseeable future. But a lot of those projects, or some of those projects, are starting to mine themselves out, and they are getting into areas where their costs are going to increase. It's a relatively high inflationary country. So how it all fits together, still yet to be seen. But I think it's really a story where the demand for uranium is growing, but not growing leaps and bounds. It's like 1-2% a year is what the estimates are. But really, it's about the production that's falling off, and the fact how do you replace those pounds in time. So it's just going to be interesting how it unfolds. But even bringing on Cigar Lake, which is a big producer, it doesn't have a long mine life as it is. I think it's got 6 or 7 years left, and when it comes off, that's a big void that has to be filled.
So if we do start to see uranium prices go up, it seems to me your company is in a pretty good position to take advantage of that. You've got 8 million licensed for 8 million pounds. That's probably more than we've ever done in the United States before. Kind of run through how it works once you see prices go up, which of your plants get brought on first, et cetera.
Okay. Yeah, we actually have like 11.5 million pounds of licensed capacity. I'm not saying that we'll be able to fill that completely, but look at it. If the price goes up, the first thing we bring online is our Canyon mine, which is, I call sort of a momentum mine. It can come online in about a year's time. It doesn't have a huge mine life, probably a 4 to 5 years or something mine life, but it comes on fairly quickly. Then followed, and it could simultaneously could happen. We could bring on Alta Mesa, would be our next project to come online, and then followed by Nichols Ranch. Depending on what the price is and the price of vanadium, some of our Colorado Plateau uranium vanadium mines would come online, and then follow that based on, depending on what the market looks like, a Sheep Mountain or Roca Honda, or a combination of those two would be after that. We can get to about 1.5 million to 2 million pounds quite quickly, in a year to 2 years, probably 2 years time, with limited capital, mainly working capital, and we can ramp up from there. Once we get north of a couple million pounds per year, we've got to start putting more capital into the ground to get us to that 3 to 4 million pounds. to get up to around that 5 million pounds plus, then you start talking about hundreds of millions of dollars. But our strike rate for increasing production would be much lower than anybody else in the United States because of the fact that we have 3 fully licensed, fully permitted, and paid for sites already.
Now, last time we had this big boom, there was a lot of consolidation in the industry, and there's some out there saying we don't need that many. I guess I'm talking specifically about processing here, that need that many plants. How do you see Energy Fuels' role in terms of consolidating operations?
Well, I'm not opposed to consolidation if it makes sense. And my experience has been global. I've worked all over the world. And I also am not opposed to going offshore into places like Africa, Australia, or even into Central Asia, into Kazakhstan, or other places. Right now, we're not focused on consolidation. I mean, if you really look at it in the big scheme of things, over the last 15 years, there's only been 4 companies in the United States that have produced 97% of the uranium produced in the United States over 15 years. 4 companies. Cameco produced about 50% of the uranium in the United States over the last 15 years. Energy Fuels or Energy Fuels assets have produced about 1/3 of the uranium in the United States. So if you add Cameco and Energy Fuels together, 85% has come from 2 companies. If you add Uranium, that wasn't producing 15 years ago, and they have a good project. Lost Creek's a good project. And if you add them and you add the assets of Uranium One, that's 97% was produced from 4 companies. So, there are other players out there that are, perhaps emerging or secured some permits and whatnot, but they haven't proven themselves to produce material quantities of uranium, going forward. Does it mean that they won't be able to? I'm not going to say no, but 4 companies that produce 97% of uranium in the United States over the 15 years. And I think that says a lot about who has done it, who has proven they can do it, and who's proven, what their cost structures are. And I'm proud that Energy Fuels, second to Cameco, are the 2 front runners in who's produced most uranium in the country.
Now you're doing both conventional mining and in-situ recovery mining. Talk a little bit about the advantages and disadvantages of each.
Yeah, look, I personally am experienced with both. Very seldom do you find people that have done both conventional and ISR. People are either conventional or they're ISR. There are a few people out there who've done both, but look, they both have their advantages and disadvantages. Frankly, if you're looking at, if it's a cost, if things are cost competitive, I'll take a conventional mine any day of the week over ISR because it's more defined. One of the problems with ISR has been the reclamation restoration cost on some of these ISR projects. It is something that's plagued the industry for a lot of years, and people don't really talk about that. It's not a real environmental issue, but it is an issue when it comes to what are your costs between the 2 projects. But they both have their roles. The majority of the uranium produced in the world comes from ISR, and the majority comes from Kazakhstan. And Kazakhstan has a unique environment where they can produce uranium quite cheaply with acid, sulfuric acid. But they also do not restore. They do not have to restore the aquifers. And that's another reason why they're low cost. So, as I said, and I've ran an in-situ recovery project in Australia that didn't have to restore either. And so you never had that sort of open end on what your actual costs are. And for example, if you look around in Wyoming, there are some challenges with the projects that have been mining for years and getting them restored and recovering the bond from those projects. So they all have their own specific applications. but I'll always take a stockpile of uranium in front of the mill that I can process and recover the uranium if the prices are about equal. If the ISR project has low cost structures, I'm also interested in that. But it depends on where you're actually mining, the quantities you're mining, and the jurisdiction and the requirements for restoration also are factors.
In your last earnings report, you said you were strategically maintaining your uranium inventories. Does that mean that you're not mining, or it means that you're mining a little bit and selling some on spot still?
Look, we've built inventories over the last few years. A lot of that has come from our recycling business, which we've done for decades, or at least the White Mesa Mill has done for decades. We think that it's not fair value to sell a pound of uranium at $30, so we think the price of uranium is going to go up. All the uranium that we have is U.S. origin that we produced. Most other uranium companies in the United States have purchased their uranium. That's happened as of late. Look, at UR Energy has some material inventories of uranium that they produce, but everybody else, or most everybody else, has bought uranium. So look, we think that it goes back to what I said earlier in our discussions. The fair market value of a pound of uranium, or replacing a pound of uranium, is higher than current market prices. So we think there's a point where those prices have got to go higher to reflect fair value. So, it's our goal, unless we have to do otherwise, to wait for that time, because we think we get a better return on that than we would having money in the bank at almost 0% interest.
All right, let's shift away from uranium a little bit and talk a little bit about vanadium. This is a relatively new thing for you. How does it fit in with your operations? How easy is it to switch? This is being done at the White Mesa plant, right?
Yeah, it's not new to us. It goes back at least 40 years with the asset, but it's traditionally been sort of a campaign basis. The price of vanadium is so volatile that I would say the White Mesa Mill has recovered vanadium 2 or 3 years out of every 10 years. I started in the business as a uranium vanadium miner back in 1976. That's 45 years ago. Look, we've done a number of campaigns, and I've worked with these assets going back into the 80s. So, the Energy Fuels, the public company Energy Fuels, didn't have these assets back then, but I worked with those assets. Look, vanadium is really funky because it's so volatile. A couple of years ago, the price was $30 a pound, then it dropped to $4 a pound. Now it's back up to about $8 or $8.50 per pound. We'll continue to be ready to respond when the market, supports it with our vanadium production capabilities. But we also have about 1.7 million pounds of vanadium in inventory that we can put into the market when we choose to. The hard thing about the vanadium market is the timing of the vanadium market. It can be so spiky if you try to start up and time the market. Usually by the time you produce your vanadium, the price has dropped again. So the best way to play the vanadium market is to have inventories like we currently do.
Have you said what type of price you need to justify operations, justify mining?
Look, at the current price of around that $8 to $8.50 per pound is about what our costs are. So it doesn't really have a margin for us to mine vanadium right now. But the way it moves, if it gets up to $9 or $10, it could be an incentive for us to go back into vanadium production. But again, we will play the game with significant inventories already on the ground at White Mesa.
And at this point, you're not selling; you're just maintaining inventories.
We're not selling, and if we did sell, we might look at producing vanadium to replace the inventories that we sell.
Let's move on to the exciting part of the story, the rare earths, and this is somewhat new. You've signed some intake agreements to take in some monazite, and you've signed some outtake agreements. At this point, it seems like it's a very small portion of the capacity you're using up to do rare earths. What do you see for the future? What would you need to see to really make that expand?
Well, what do I see in the future? I see big things happening. We're looking at this big. And yeah, we did sign an agreement for purchasing monazite from Chalmers. It's initially a very small quantity, but equivalent to about 8% of the U.S. requirements. So to put that into context, that's pretty material. Chalmers believes that they can uprate that 2 to 2.5 fold in the short to medium term. So, 8% could become 16%, could become 20% of the United States requirements. And it's very high grade. It's like 55% total rare earths with great distributions of NdPr for the magnetic elements and the heavies. The separated value per ton, if you have the capabilities to separate, is around $17,000 or $18,000 per ton of contained material. It also contains uranium grades that are equivalent to our mines in the district around the White Mesa Mill. So we also signed an agreement because there is no separation, which is the third step in the process from mining to making a carbonate, which is what we're doing at White Mesa separation. There is no separation in the United States with Neo Performance Materials in Estonia at their Silmet operation. So our next step is to secure more feed. And to put some scale on it, we're looking at feed somewhere 10 to 15x the Chalmers material. So quite material. We are going to do separation at White Mesa Mill. We're starting steps right now to focus on separation. We look for full integration, and we look for full integration in production at scale. At world material scale, at world low cost structures that we believe will be quite favorable. So we are thinking very big, and we think we're ahead of the game when it comes to processing in the United States. This first material we're processing is more than anyone else is doing right now for in the United States processing. MP is mining and shipping it to China. They're not processing like we are to a rare earth carbonate. I think that's what they're aspiring to do in the not so distant future. So we're going to be ramping this thing up, and it's probably one of the most exciting opportunities I've seen in my entire life. And I'm not trying to be a promoter there. I'm just stating I think this is a very exciting spot, combined with our ability to produce uranium and recover the uranium from the rare earths feed streams of monazite.
Do you have the personnel, the equipment, the permitting to enter the separation stage?
Yes.
What's stopping you from doing it right now?
We have to build out a separation plant, but we have a long history of solvent extraction, which is what the main use of separation is done with solvent extraction. We've got 40-year history. We have 2 solvent extraction circuits at the White Mesa Mill for uranium and vanadium. So we're comfortable with solvent extract. That is a big step in the right direction. We have a site that is fully permitted to produce the carbonate. We may or may not require permits to do the separation stage. We've engaged or have relationships with Neo Performance Materials, which does separation in Estonia. Konstantin Karyanopoulos, one of the most successful guys in the rare earth space in the world. We talk frequently. We meet frequently. We've got access to their teams. We've also got Brock O'Kelly, who spent 35 years at White Mesa. I'm not White Mesa, but at Mountain Pass as VP of processing. And he has joined our team as an advisor. We've got Jack Lifton, who's got 50 years experience. And we're in the process of, and actually, in fact, it's happening where we've got a couple of the world's most renowned experts in separation going to start working for us shortly on the separation process. So we absolutely believe we have the skills and the people aligned. We will complement as we evolve. But there are people that have said, oh, you don't know what you're doing. Well, we've got some of the world's foremost indisputable experts to help us in that regard. And so we're going to do it, Michael. I can tell you we're going to do it. We still need to secure, we got to take the balance between the sources of material, making the carbonate, and moving to separation. And we're absolutely convinced that we can get there quicker, faster, and at lower cost structures than others.
And this can be done at the White Mesa plant without really slowing down any uranium processing if that takes off?
Yes, material. We are sharing some of the infrastructure right now. There's some shared equipment, not a lot of shared equipment, but the mill typically, it takes a year and a half to build up enough feed for the mill before the mill actually starts to process. So even if the uranium market picks up quickly, we have some time. And we believe that even if the uranium market picks up, that we can augment and add some additional tankage, maybe an addition to the plant area that can accommodate the rare earths and the uranium and the vanadium as is required, at the time that the demand is there. So we see the mill as being very flexible. It's on 5,500 private acres. So we've got a very large land position it sits on. It's got all the permits. It's got the shops. It has the laboratory, a lot of the people. We've got about 60 people working there full time right now. We've got a lot of the electricity. We got water. We got the tailings, triple line tailing cells designed to 1,000-year RCRA standards. So we've got a real head start of others just because of where the location is. Also in a low cost of business area of Utah, and low cost for things like power, labor, whatnot. We're in a really excellent position. So we'll learn as we go, but having the long-term experience with solvent extraction is a pretty good start compared to others.
Terrific. Well, it's an exciting part of your story, and we're all anxious to see how that plays out. Mark, I want to thank you for giving us your time today and letting us learn a lot more about Energy Fuels. There's a lot to keep an eye on.
There is. Watch this space, Michael. It's going to be exciting. We expect some really solid news flow over the coming next few months. So I think that people will realize that we are serious about getting there, and that's our objective. Now there always can be a Murphy out there, but we don't see it right now, and we think the fact that people are forecasting a 10x increase in the demand for rare earths in the next 10 years, that's a good spot to be in.
Wonderful. Thank you again, Mark.
Thank you.
Mike, this was a very interesting interview. A couple of questions I had were, what are the key variables that we look for in terms of uranium prices? You mentioned that, the course of the last, several years, uranium prices have been up, going up modestly. But what is the key drivers and key variables that we should look for?
Well, it's a good question. It's not easier to monitor uranium prices and isn't the type of thing you just pull up. Most of it's done in either short-term or long-term contracts between the electric utility that has a nuclear plant and the supplier of uranium. And what we're seeing right now is that the electric utilities have not been signing long-term contracts, and they're leaving themselves very exposed when we start talking about 2022 and 2023. Meanwhile, they've been buying stuff on the spot, sometimes from producers, sometimes from overseas, and that spot price has been hovering around the $30 or so. But as we heard Mark Chalmers say, most U.S. or Canadian uranium producers really need a price well into the $40 per pound to justify doing the mining. And we've been through a period ever since Fukushima where North American production has really come to a bit of a standstill. Certainly in the US, Canada is a little bit more active. And that's created a situation where a lot of these, the processing plants are shut down, where exploration companies haven't been doing new exploring. And many of those talk about a 10-year lead time between when they start drilling and when you actually see production. So I think inevitably this standstill between $30 spot and let's say $45 production cost needs has got to come together a little bit. And when it does, it has the potential for uranium prices to move quickly. And because we haven't been doing exploration, stay high for quite some time.
So it sounds like there might be a supply constraint, but what's going to drive the demand at this point?
Well, demand's coming from several different areas. We are seeing new plants being built. Much of that's being done in China and the Middle East, although we did have a new U.S. plant last year. Russia is experimenting with smaller nuclear reactors, and that may be the fuel. We've definitely got, a green White House now that's promoting, a move towards carbon neutral. That certainly nuclear fuel has got to be a big part of that. We touched briefly in our questioning about the development of a national uranium reserve. Still, we don't have all the details on that, but that has the potential to be very positive for the U.S. producers of uranium. And there really are only a couple U.S. producers of uranium, and Energy Fuels is right up there as the biggest with the most capacity to come online if things start moving.
And you mentioned the Biden administration and the Green New Deal, or I don't know how else to frame it, but certainly they've been embracing green energy. It seems like they really have not moved forward with that platform, at least of yet. And I was wondering if maybe that's included in the infrastructure bill or whatever, but what are your thoughts about how this administration might view nuclear going forward?
Yeah, the infrastructure bill, if that gets passed, includes about $200 billion towards green energy, and that's used kind of in loose terms, but it's a pretty big number. As to how things go forward, of course, it's politics. We'll have to wait and see on all that. Most of things are directed towards wind and solar and electric vehicles and recharging stations and that type of stuff. So it doesn't mention nuclear per se, but nuclear is clearly going to be a big component of our energy needs going forward if we really are going to try and get towards carbon neutral.
And you seem really excited about other aspects of this company outside of uranium. I was wondering if you can just provide us your key takeaways about their other opportunities.
Yeah, uranium is exciting because, as I mentioned, they've got the capacity to really be one of the big players, and they've got the plants and the personnel, so they can move real quickly. But this rare earth really is something to keep an eye on. Rare earth elements, and I can't name all 17 or whatever it is off the top of my head, but these are elements that are becoming very valuable because when we start talking about electrical vehicles and those type of stuff. So you heard him say, a 10-fold increase in the demand for rare earths. That's the type of stuff I think we could be seeing over the next, let's say 10 years. And there really, when he talks about separating the rare earth, there's really only one big plant in China that does that. So for them to move into that space would just be terrific. And you heard him kind of throw some large numbers in terms of the value of all that. Right now, they're just taking the input. It's kind of a sand quality. It's called monazite. And then they're separating out the rare earth elements from the sand, but not separating them individually. And that's the next step he's talking about. And I think that's where the big money can come from.
Well, thanks, Mike. It was a great interview. Thank you very much.
Oh, thank you.
Thank you for joining us for this C-Suite interview presentation brought to you by ChannelChek. Visit our YouTube channel for more interview content, as well as virtual roadshows and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelchek.com or click the link in the description to access equity research, news, and advanced market data on this and the 6,000 other small and microcap companies listed.